Australia's falling dollar. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of HeiseSays. I have my morning stein of coffee and I thought we'd start this Friday by having a look at an article from the ABC about Australia's weakening or falling dollar. And before we go through to this, we'll just jump over here to my favourite website. I've got a few favourite websites, and thank you to everyone who answered my community post with your other favourite websites for financial information and trading analysis. I'll have a look at all of them. Appreciate it. But we'll have a look here on trading economics, and we'll just look at the Aussie dollar, and you can see, well, it's definitely heading down, and we'll change. Let's change to a bar chart, and we can see that we're going further down. And we finished, well, for the last 2 days, we finished below the start open price today, the day before, or at the moment we're above. But generally, it's not looking too healthy. Now, let's have a look, because there are a multitude of reasons. And the reason why this is worrying, or this is just something we need to keep an eye on, is because of our cash rate. Our cash rate. Because think about it, if our dollar starts dropping down, because apparently Australia's dollar is a proxy for the Chinese economy. Because for those of you that aren't familiar, we are pretty dependent on China. This is the Observatory of Economic Complexity, and I know at the moment I'm showing it all the time. Well, it just happens to be we're discussing trade and international trade. These are the exports of Australia, 244 billion. And then you've got, and this is not counting, these are just the physical exports. This isn't counting tourism or university education, which are also big, huge parts of our export economy. These are our imports. Now, if the dollar declines, everything will become more attractive to foreigners who have got access to if their currency is better or higher value relative to our money. So that, these things will, over time, not instantly, but over time, these will be more appealing. Tourism will be more appealing. University education will be more appealing. But everything we import will be able to, will become more expensive. And that will have a cost of living implication. So what might happen is the RBA might lift up the cash rate. That would increase the interest returns and would hopefully lift the dollar value. But that has other implications as well, other concerns that we need to worry about. And one of them is people struggling to pay their mortgages, and the struggle to pay mortgages would be exacerbated by an increase in housing costs, guys. And we'll look here at property prices. Just look at how they've climbed since 2006. Okay, that's what the RBA is worried about at the moment, that they'll, reinvigorate the housing boom. So when people tell you, the dollar dropping is good for the economy, it may not be. So, because frankly, we're just exporting raw materials and we're importing everything else. All your other costs of living will go up. Maybe good for maybe it's time to buy some shares in some mining companies if they've been depressed, but not financial advice. So, Australia's dollar fell to an 11-year low this week, hitting 65.43 US cents. And I'm looking at it right now. It's 65.76 right as I'm recording this video. Global fears about the coronavirus spreading outside China have contributed to its decline, but they're not the only reason. So what's going on? The dollar has been weakening for 12 months. Australia's dollar has been slowly losing value since February last year. The decline began after Reserve Bank Governor Philip Lowe delivered a speech in Sydney conceding Australia's economy had weakened towards the end of 2018 and more interest rate cuts may be needed in 2019. At the time, Australia's dollar was sitting around 72.4 cents. It started losing value almost instantly. Remember that, guys. Remember that. Remember when it was over $1? I remember that. If honestly, I would bet a lot of you watching the channel here have, or some of you have anticipated this. What have you done to prepare it? Maybe let people know in the comments. Have you invested in precious metals? Have you shorted the dollar? What have you done to prepare for it? Or have some of you just used PayPal to flip your money over from Australian dollars to US dollars and just let it sit there? There you go. Is it possible? Here's a question. So, let me know in the comments if you can, if you can actually buy have a US currency bank account here in Australia. Is it possible to have with a normal bank? That'd be useful. Maybe I should start charging my clients in US dollars. So, why would the dollar lose values when the RBA cuts rates? If Australia's interest rate declines relative to the interest rates in the US, it becomes less attractive for investors to keep their money in Australian dollars compared to US dollars, and that puts downward pressure on the Australian currency. The RBA ended up cutting Australia's interest rate 3 times last year from 1.5% to historical lows of 0.75, creating a lead weight for Australia's currency. At the moment, the effective US federal funds rate is a touch over 1.5. These are unprecedented rates for Australia, Westpac senior currency strategist Sean Callaway told the ABC this week. That's been the main driver of the downsizing in the currency, I'd say. Trade tensions between the US and China. Again, Australia is just a proxy for China, or the Australian dollar is a proxy for China. Trade tensions between the world's 2 largest economies have also weighed on Australia's dollar. In mid-July last year, the currency appeared to stabilise around 70 cents. But it plunged again in August below 67 cents when President Donald Trump began threatening to put fresh tariffs on China. And we've seen just the imports and exports from China, how they are just slowing at the moment, and how shipping is crashing too. So why? Because Australia has more to lose than most countries from the US-China trade, given its economy is tied in tightly with both economies. We are the most, well, we're in bed with China more than anyone else. I think we're a blip to China, really, if you look at the scale of what they're importing. I'll just do a search here. We'll have a look. Okay, of course, I typed in France and not China. We'll look here at China. So, who are their biggest top exports for China broadcasting? We'll look at top destinations for China. United States, Hong Kong and Japan, Germany, South Korea. There you go. We don't even rank on there. Top import origins are other Asia, South Korea, Japan, United States, and Germany. We don't rank there at all. Let's have a look. Where do we sit here with imports? Destination Australia, 1.9%. 1.9% for their exports. And they're a huge chunk of ours. Imports, okay, there you go. We're 5.5. So we're not too bad. We're not too bad. We're up there. What are we? 85 billion. Germany, 95 billion. USA, 133 billion. But there you go, guys. There you go. Better than I thought, to be honest. Better than I thought. After the mid-year battering, Australia's currency enjoyed a slight reprieve in December and January, when it appeared trade tensions were easing. In December, the so-called Phase 1 deal between both countries was pre-announced by Mr. Trump, with few details, and it helped Australia's dollar close the year on a positive note around 70 cents. But the reprieve didn't last. I mean, this just shows you that the market is based on gossip and hearsay in some regard. People are taking a bet on where it will move. They're anticipating. And the market is responding. I mean, what is the Phase 1 deal? Anyway, and I thought that it was all just going to be one deal. He wouldn't do partial deals. So, the bushfires saw the dollar cross an important threshold. Come January, once Australia's bushfires turned catastrophic, analysts globally began revising down their immediate growth forecast for Australia's economy. The fires had come on top of data showing the economy had ended 2019 sluggish. On January 2nd, Australia's dollar was trading at 70.17 US cents, but fell below 70 US cents that day, and it hasn't recovered. And, well, there's a psychological barrier at all these points too. Now we're at 65. Where do you think it will head, guys? Let us know in the comments. Will we see 50 or 45 cents again? Will we see sub 50 US cent? So now we come to coronavirus. In such a jittery environment, fears of the coronavirus outbreak in recent weeks have pushed Australia's dollar to an 11-year low. It hasn't been this low since March 2009, when the S&P 500, an index of 500 largest listed companies on the stock exchange in the US, bottomed out after the GFC. So what does it mean for the Australian economy? A lower Australian dollar typically benefits Australia's exporters, and it certainly boosts the profits of mining companies. A lower dollar also helps Australia's education sector and its tourism operators. But we're seeing, guys, that they're copping it just because of the virus. Domestic tourism operators benefit because it makes it cheaper for Australians to travel locally rather than overseas. Yeah, no, that's true. I mean, are you planning a holiday locally, or are we all cutting back? For me, holidays are now just camping trips for the kids. And that is, you may be able to hear them in the background having a play outside. So, but the coronavirus has complicated matters. Since the outbreak has occurred in China, one of Australia's major trading partners, it has severely interrupted supply chains for Australia's exporters, importers and manufacturers. And the government's travel ban on Chinese tourists and students coming to Australia have hit the tourism and education sectors hard. So how long will the dollar remain in the doldrums? It's a fool's game trying to predict how a currency will behave in the medium term. But currency strategists say it's hard to imagine scenarios in which Australia's dollar will strengthen in coming months, particularly because the Reserve Bank is likely to cut interest rates again this year. They say it's more likely the Australian dollar will fall further than these levels, but the fact the coronavirus has stopped spreading in China will be welcomed by traders. The coronavirus impact on China is easing as daily activity indicators suggest an economic recovery has started, the Commonwealth Bank analyst Vivek Dar says. But do we trust China? And will businesses realize they shouldn't be so dependent on one source or one destination? Will Australia learn from this? Or is it just beginning? I frankly don't trust any figures that are coming out of China, but we'll have to see. We'll have to see. Is there anything Australians can do about the low dollar? Consumers can't do much to influence the value of the dollar, but they can use a lower dollar to their advantage. If you're looking for places where your Aussie dollar still has some value power, Vietnam and Indonesia will be reasonably attractive, Mr. Calloway said. If you're not the gittery type, if you're willing to take a little bit of risk, there's some great opportunities in places where regional tourism have fallen steeply, like Thailand. There'd be a lot of room on your plate. There'll be fantastic discounts on hotels. I've seen cruise ships why the hell would anyone want to go on a cruise ship right now? I mean, seriously. A viewer sent me some stuff yesterday, just the share prices of cruise lines. They're crashing. Why would you want to go on a cruise ship with a global pandemic? When was this written? When was this written? 3 hours ago. Okay, yeah. Oh, yeah, I'm going to go on a cruise ship. Yep, come on. Oh, boy. If you want to help Australia with the recovery of Australian towns, you could travel domestically. Okay, I'm here thinking, is there anything you can do about the low Australian dollar? I'm here thinking, buy some metals to hedge against it. You know, that's my natural. I'm thinking, okay, he's going to say invest in some gold or some silver or some precious metals. Convert some currency to the US dollar. Invest in some foreign shares. That's what I'm thinking. I guess I'm not thinking right, am I? Go spend your money. Spend. Maybe that's the problem I have. I mean, for us, self-isolation isn't going to be a bigger problem. For us, the biggest issue is power and water. Ensuring we have a continuous supply of that. Because we work from home. I've got enough of my coffee stockpiled, so we should be fine if we're required to. But then again, I'm also not in the demographic that has the greatest risk. Anyway, guys, let me know what you think about this dollar plunging here in Australia. What are you doing to address it, and how are you planning? Do you think it'll head further down? Are you shorting it? Let us all know in the comments. Take care, guys. Please like, share, and subscribe to the channel. If you're a fan, there are a few things you could do to help support us. You can join the channel here on YouTube. For a small monthly fee, you get access to badges and emojis. You can support us by joining us on Patreon with another small monthly fee. You can purchase our merch. You can see my pocket squares behind me right here, handmade in this very own sweatshop that is our house in Brisbane. Perfect for any function or event. You can use our affiliate links at Amazon or eBay for your consumer purchases, or Independent Reserve and Kucoin for the crypto traders out there. We also have PayPal if you want to contribute that way, and we really appreciate all your support. Take care, guys. Have a great day, and watch that Aussie dollar. Bye for now.